Welcome. In this video, what happens if we buy Zbcn with $1,000? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze Zbcn.
Seeing an upward trend line in the market is generally interpreted as a positive sign by investors, as this line indicates that the price is gaining upward momentum by forming higher lows over time. Upward trend lines in technical analysis suggest that an asset has bullish momentum and that buyers are currently more dominant than sellers. In this case, we have a clear upward trend line, and it is being used to define the lower boundaries of the price movement. The price is currently approaching this upward trend line, and if it touches this critical level, it is expected, according to the rules of technical analysis, that it will bounce upward and not break below the trend line. This is because the line represents an area where buyers have previously stepped in strongly. When a price approaches and tests an upward trend line, it is essentially undergoing an important test in the market. During this test, it is expected that buyers will regain strength and defend the price to the upside as they did in previous instances. If buyers step in again at this critical level and push the price upward with strong buying pressure, it produces a strong signal that the uptrend is intact. In technical analysis, such trend lines are not just visual tools, but also strong support resistance levels that reflect investor psychology. Each time the price touches this upward trend line and reacts, it shows how much buying interest there is in the asset. An upward trend line is a tool closely watched by many investors who often shape their positions around it. Falling below this line indicates a break in the trend, so many investors will continue to hold or increase their positions as long as the price stays above it. This increases the likelihood that the price will find new buyers when it reaches the trend line. Especially long-term investors and technical traders may consider opening new long positions when the price hits this level, as it often regains momentum there. Therefore, this region serves as an important support level both psychologically and technically. At this point, what investors should pay the most attention to is the nature of the price's contact with the trend line. If the contact is met with strong buying pressure, this indicates that the uptrend is likely to continue. However, if the price touches the trend line and selling pressure increases while volume decreases, this should be closely monitored, because in that case, there may be a risk of dipping below the trend line. In the current scenario, the price approaching the upward trend line and making contact with it could present a strong opportunity for long positions. If the price bounces upward after this contact, it will provide a clear signal that the trend is continuing, allowing investors to confidently maintain their positions. Upward trend lines also serve as a kind of roadmap for investors. With this roadmap, areas where the price may find support can be predicted in advance. If the price successfully bounces from this line, it is likely to retest and surpass previous highs. Such bounces restore market confidence and bring new buyers into the market. As a result, price movement may accelerate and a new wave of higher highs may begin. In this way, trend lines help us understand not only the past, but also the future. However, the validity of the upward trend line is directly related to how frequently it has been tested in the past and how the price has reacted after each test. If this line has been tested multiple times in the past and the price has bounced each time, it can be considered a strong support. This builds investor confidence in the line. Therefore, the current approach of the price towards this line should be interpreted as a positive technical development. Each time the price approaches this line, the likelihood of buyers stepping in increases, and this could signal a potential upward move. In this scenario, the price pulling back towards the upward trend line and then bouncing from it would indicate a continuation move following a healthy correction in the market. Healthy corrections often precede more sustainable and stronger rallies. During such corrections, the market breathes, weak hands are shaken out, and strong investors strengthen their positions. Therefore, a pullback towards the trend line should not be seen as a weakness, but rather as a consolidation period to build new strength. In technical analysis, such scenarios are called pullbacks or retests, and if these tests are successful, the price can surpass previous highs and form new peaks. In conclusion, we have a clear upward trend line, and the price is approaching it. In this situation, the expectation is that the price will bounce from this line and continue its upward movement. Strong buying activity at this level will confirm the uptrend, and if this happens, the price may target new highs and present significant profit opportunities for investors. For those who follow the discipline of technical analysis, such trend lines are of great importance, and a bounce from the trend line is a sign that confidence in the market has been restored. Therefore, these technical structures play a critical role in both short-term and long-term investment decisions and can provide major advantages when used correctly. But we can't base our analysis solely on trends. Let's now take a look at other metrics as well. Stay tuned.
The cup and handle pattern is a classic and reliable formation in technical analysis that is considered a strong bullish signal. The formation of this pattern indicates that investors in the market are gradually recovering after a period of decline or sideways movement, and that a new upward trend may be forming. In this context, the completion process of the cup and handed pattern observed on the chart should be carefully monitored. Because if this pattern is fully completed and the price breaks above the resistance level of the formation, this breakout often leads to a significant upward potential. The first stage of the formation, the cup part, typically forms after a long decline when the price bottoms out, moves sideways for a while, and then gradually rises back to its previous levels. In this process, the lowest point of the price and the level where it recovers form the two sides of the cup. This curved structure symbolizes that investors initially became pessimistic and then slowly regained confidence. As confidence increases, the price starts to recover upward, and the level that once served as support eventually becomes a strong resistance. This resistance level plays a critical role in the completion of the pattern. Following the cup comes the handle phase, which is a shorter and usually narrower correction movement. This correction can be interpreted as profit-taking by investors or a period of price consolidation. The handle structure may be horizontal or slightly downward sloping. However, the decline or sideways movement within the handle does not harm the overall uptrend. On the contrary, this short pullback allows the price to gather new strength, helping it to break through the resistance level with more momentum. This breakout gives investors a strong signal that the uptrend will likely continue. At this point, the most important factor to pay attention to is whether the price breaks above the resistance level formed at the top of the cup. This breakout confirms the pattern in technical terms. In other words, the cup and handle formation is considered complete only after this breakout occurs, and the target price projection gains significance only at that point. If this breakout does not occur and the price pulls back again, the pattern may become invalid or enter a longer correction phase. Therefore, it is crucial for investors to monitor this resistance level carefully and assess the trading volume at the moment of the breakout. A breakout with high volume increases the reliability of the pattern and expectations for continued upward movement. If we evaluate the potential target of this pattern, the method commonly used in technical analysis is to add the depth of the cup to the breakout point. For example, if the distance between the bottom of the cup and the pre-handle peak is equal to $0.0014 and the price breaks above this peak, the technical target would be determined by adding the same amount above the breakout point. In this case, the technical target of the pattern would again be $0.0014. This target level is a key indicator that helps shape investor expectations and can be seen as a potential take-profit zone, especially for short-term traders. The cup and handle pattern is valuable not only for determining technical targets, but also for understanding market psychology. This structure reflects the emotional transition of investors, first disappointment during the decline, followed by renewed hope, and eventually a confident return to the market. Therefore, the completion of this pattern signals that bullish expectations are strengthening and investor confidence is returning. In this sense, the pattern represents not just a technical indicator, but also a reflection of the emotional shift of market participants. Moreover, classic formations like this tend to work more effectively on larger time frames. Cup and handle patterns observed on daily, weekly, or monthly charts produce much stronger signals. Patterns formed on these timeframes attract more investor attention and have higher trading volume, making the breakout more reliable. For example, a cup and handle pattern observed on a weekly chart may indicate the beginning of a long-term uptrend. In such patterns, the target price usually points to more significant upward moves, offering investors substantial profit opportunities. On the other hand, the possibility of the pattern failing should also be taken into account. Although the cup and handle formation is considered a strong bullish signal, there are no certainties in the market.
In particular, failure to break the resistance level or a breakout that occurs with low volume may result in the pattern failing. In such cases, the price may fall back toward the bottom of the cup. Therefore, investors should pay attention not only to the technical structure, but also to trading volume, momentum indicators, and overall market conditions when evaluating such formations. Lastly, classic patterns like the cup and handle play an important role in developing investment strategies. With this pattern, investors can more accurately identify entry and exit points, manage their risk more effectively, and be better prepared for market movements. Historical examples of this formation show that when it completes successfully, the price often reaches the target level. This clearly demonstrates why the cup and handle pattern is so commonly used and considered so reliable in technical analysis. In summary, the observed cup and handle pattern is interpreted as a strong indicator of an upcoming bullish move in technical analysis. Once this formation is completed, the target price is determined by the depth of the cup added above the breakout level, which in this case corresponds to $0.0014. It is crucial for investors to monitor such structures carefully.
If we currently have a capital of $1,000 and decide to invest this amount in a cryptocurrency asset named Zbcn, a simple yet effective mathematical calculation will be enough to determine how many tokens can be purchased with this investment amount. At this point, we first need to know the current price. Let's assume that the current market price of the Zbcn coin is $0.0005, meaning one Zbcn coin is trading at half a cent. This is a very low price and can be considered a level with potential gains for a long-term investor. Now, let's compare a fixed investment capital of $1,000 to this current price. When we divide the investment amount of $1,000 by the unit price of Zbcn coin, which is $0.0005, the resulting number shows how many Zbcn tokens we can purchase at this price. When we perform this calculation, we get exactly 200,000 Zbcn coins. Yes, you heard that right. With just a $1,000 investment, you can own 200,000 Zbcn coins. This clearly demonstrates how striking the low-priced buying opportunities in the cryptocurrency market can be. However, it is important to emphasize a crucial point here. Every investment carries risk, and for these 200,000 coins to bring significant returns to the investor, the price needs to reach a certain target. This is where pattern targets, frequently used in technical analysis, come into play. Specifically for the Zbcn coin, it is observed that a cup and handle pattern has been forming, and the target of this pattern has been clearly defined according to technical analysis rules. It points to approximately $0.0014. In other words, if the cup and handle pattern is successfully completed and the expected pattern target in technical analysis is realized, the price of Zbcn coin could rise to the $0.0014 level. Now, let's consider the scenario where our 200,000 Zbcn coins reach this target price. The second calculation involves multiplying the number of coins we own by the pattern's target price. So when we multiply 200,000 Zbcn coins by $0.0014, how much profit do we get? The result of this calculation is $2,800. In other words, if the technical analysis target is met with only a $1,000 investment, the investor would realize a significant return of $2,800. This clearly means a profit of $2,800 minus $1,000, which is $1,800. This kind of investment may be very attractive, especially for investors focused on low-cost, high-potential projects. Since the current price of the Zbcn coin is low, the number of tokens that can be purchased is quite high, which allows the potential return to reach much more striking levels if the price rises. Because the multiplier effect of an investment increases proportionally with the lower unit cost. If the coin's price was, for example, $1, only 1,000 coins could be purchased with $1,000. And if the coin's price rose to $3, the total return would only be $2,000. However, buying the coin at $0.0005 gives a multiplier effect to the investment's return. Additionally, psychologically, such investments provide morale and motivation to investors, because owning 200,000 coins creates a sense of scale numerically. People like to see large quantities of assets in their portfolio, and this positively affects their investment decisions.
More importantly, the fact that this coin has a reasonable and technically realistic target of $0.0014 creates a hopeful scenario for the investor. This target is a price level calculated according to the technical analysis rules of the cup and handle pattern. In other words, it is not a product of imagination or speculation, but a mathematical result offered directly by the structure formed on the chart. At this point, it should also be remembered that an investment strategy should not be limited to technical analysis alone. Factors like the project's fundamental analysis, development team, roadmap, community support, and potential listing on exchanges also increase the realism of this return. However, since we are moving here based solely on price-based technical analysis, we are creating a projection for the future based on the cup and handle pattern and its target price. Within this framework, the scenario where 200,000 Zbcn coins reach the $0.0014 level and provide an investor with $2,800 return appears as a strong scenario both technically and logically. To summarize, if we have an investment capital of $1,000 and invest this capital in Zbcn coin at a price of $0.0005, we will own exactly 200,000 coins. If this coin successfully completes the cup and handle pattern in technical analysis and reaches the target price of $0.0014, the total value of the 200,000 coins will be $2,800. This means a net profit of $1,800. This figure represents a return nearly 3 times the initial investment. Therefore, if the investor's risk profile is suitable and the project also carries reassuring features, this type of investment evaluation can yield quite positive results in the medium term.
I wish you all a lot of profit. See you soon.